What's up, stream? Good morning. We got that Thanksgiving week pre-Black Friday trading going on here. What's up, y'all? Whoa, hello, crazy hair day. I didn't even notice. I just kind of rolled out of bed. It's like sticking up everywhere. What's up? Hey, good morning. All right, y'all ready to do this? 100 on black. We're gambling today. Let's go. Good morning. Wow. Hello, everybody. Hey, what's up, Zoom? What's up, YouTube? Folks in Zoom, don't forget to head over to the YouTube as well. All right. Looks like a nice, flat, boring, snoring and boring day. Just close, delete some of this stuff. Okay. Monthly hedge there. Dancing around the monthly hedge and futures here. We're sitting here at 60, 68, 34, yellow line. Still in there. Look at the market. You know, our pre-market routine. We know how it goes. Financial juice, what's going on? Nice cabinet appointments. ESG, expected jobs, claims, durable goods, lower than expected. Yeah, we had all that today, right? All right, let's get the a lot of people asking me what's the trading schedule like? How do we decide? Let's do an icebreaker this morning. We have 15 minutes. That's really quick. You guys know the drill. Pre-market routine, the same every day. We're gonna make some money today, dude. I've killed it last 3 days. On a 4,500 day, a 4,500 day, and a 5,500 day. That's 15,000 the last 3 days. All in the fundeds. No, that's not me trading 20 accounts and tethering them together and making $500 and saying I made 30,000, or the fucking math is 10,000. It was one account with the ETF live funded, and then a handful of my. There's a handful. Apexes. What's up? Good morning. Love you guys. All right. Alrighty then. Okay, let me get this stuff going on your sector spiders. Earnings. You guys can do this every single morning. You guys ready for the world's easiest and simplest pre-market? All right, do me a couple things. These are things we're gonna learn. We teach this in our classes. But number one, don't turn on CNBC and listen to the TV while you're trying to trade. You know, I know it's like when I was a trader, it felt super tradery to like listen to the TV people talk about the stock market. Look, they're not even traders. They're mostly just reporters. They're just reciting what the headlines are, and you're going to be full of a bunch of noise. Listen to some calming music. Keep your heart rate down. Things like that. All right. Number two, double check every single trading day that you're not running into like massive earnings pre-market or post-market, and check it at the end of the day too, so that you know. Go to Zacks, go here, so our market cap. You can see anything going on today. Unless you are betting the fort on the Commonwealth Bank of Australia, you're going to be fine today. Okay, ain't nothing going on. All right. Sector spiders. You need to make sure you understand what's going on with the sectors when the market opens. So right now, yes, you'll see if there's, basically you're looking for a trend. The Nasdaq is selling or the S&P is rallying, or you're going to come here and try to understand, especially when they're doing something different. Is money rotating from tech and energy, from financials into communications? You'll see the S&P and Nasdaq do this. When they're all going the same direction, come here and see if all the sectors are selling off. See if there's a strong one. Not a strong sector, the market's probably going to be crashing. All right, investing, and look at the number. The mortgage rate came out. Important to me. I just bought a house. Well, under contract. Did I lock in my mortgage rate? Was I correct? Mortgage rate. When they called me back then and said lock it in because it's going up, and on stream we locked it in because it's going up. We did that analysis, right? Can we predict mortgage rates? Well, we did a pretty good job, right? I called them and said I'm locking it in. Mortgage rates are going to go up. The demand for new houses is down, stock market's going up, and all of those things correlate with higher mortgage rates. Speaking of mortgage rates, how's the unemployment doing? Today is Wednesday. We had the GDP come out. Durable goods came out. Let's double check that. Double check this guy and jobless claims, because these are Thursday reports that all came out on Wednesday. Or all coming out on Wednesday, sorry. Oh, they did shove those pre-market. How about that? Okay. Let's look at those. This will help us predict inflation. I'll teach you guys how to do that. Look at the PMI in 24 minutes. Core PCE. Oh my God, so many things today. Gotta love holiday weeks. They cram all those Thursday and Friday things into Wednesday, right? All right. So, what's the market doing? What's the market calendar like? So, did you know every single day the market will be open for trading? Futures market, that is. In the mornings. There's no holiday for Thanksgiving for futures. For half days, I'll teach you guys to read this and check a little icebreaker. Okay, well, I'm gonna put the post everywhere that my stream was live. So I'll be streaming every day. All right. So a couple things, right? You guys want to know the earnings. There's a CME market calendar, right? If you guys want to know how to decipher this, the commodities world loves to just make it really hard for you, because that's how we are in the Chicago world. We like to give you all kind of stuff as a trader and say this is what's going on. You might wake up and go, is the market open tomorrow? Is that market open on Thursday? Well, let's give you this puzzle to solve, right? It's like a fucking escape room. All right, where's the lock? What's the numbers here? Like pre-open, open. Just tell me if open, when the trading hours are, right? Well, here's how it works. Rule number one. This is just a little icebreaker to get the stream going, y'all. Welcome. Don't forget to hit that like button. Don't forget we have Black Friday week going on here. Couple cool deals. 90% off everything Elite Trader funding. Everything. 90% off. Go stock up on those evals. Pass all 20. I literally passed all 20 in a couple days. I just one trade ticked them to get the 5. I had 20 eval accounts. I went to fund an ETF. And then when they promoted me to live, they put all that money in the live account. Now I'm trading with ridiculous balance. And I paid many tens of dollars for these accounts at 90% off. Go get them. Use our code every $250 you spend with these guys. The code is somewhere in the chat or in the description. Every $250 you spend, we put you in a drawing to draw for like lifetime memberships and trading computers and all this fun stuff we're going to do next year. So if your name goes in the hat, it's always going to be there. And eventually your name will get drawn. So if you are loving the trader funding world, this is the way to get money back. It's like a punch card. You know, every time you buy, you'll eventually get something. Our Black Friday, we're selling our courses $19.99. That's it. They're never for sale. Usually part of the $200 package. You get those for $19.99, $1 a day to try all our courses. And it is what we do. Okay. Icebreaker. Mark it up in 7 minutes. Quickly. All right. So first of all, every single product you trade has a different schedule. Why? Because they all are traded on different exchanges. The CME group now is like basically owns all those exchanges to a degree. But you know, like you had the Dimex, the Comex, the CBOT, you know, there's millions of futures exchanges. They're all in different buildings back in the day. All had different guys in funny yellow jackets yelling and screaming at each other with numerical gang signs to buy and sell. And then all of a sudden they became electronic, and the CME granddaddy kind of like basically absorbed them all. So each one of them had its own holiday schedule because it was its own separate exchange. So they never really changed that. So now you have different schedules. So you have to find out what it is you trade. It may be open. It may not be open. Like the grains that have anything. It just pre-opens all the way through the day. But here you have other things. So when you see the word pre-open, don't think of that. This is a Globex word where the Globex enters what's called the pre-open state. This is the state it goes into where you're allowed to set limit orders, but you're not allowed to fill market orders. And basically it just means market is halted. So at 12 o'clock, market orders will stop firing off, but you'll be able to set a limit order all day long. And you can watch the level 2 like flicker and show orders. Kind of neat. That's it. So Wednesday, pre-open, which was today Wednesday? Yeah, so tonight, 4:45 like normal, you know, the pre-open state, you'll see limit orders start filling up. Then at 5 o'clock, and this is central because this is Chicago. They always do everything central. 5 o'clock, futures market opens just like normal. Then at noon, it halts. And then at 5, it opens again for overnight trading. And then when it's closed, they actually say closed. No limit orders, no market orders, no nothing. Market's closed. Everything gets rejected. So whenever you see an open and a close, that is considered one day. You draw the lines. An open to a close. That's considered one day. And that day is always the tip of the arrow. So Wednesday night, Thursday morning, Friday morning, futures markets trading all 3 of those things. And on your daily chart, that will be Fridays, where that tip of the arrow is, daily candle. Yes, I know. We like to make it hard in the futures world. That's all right. You don't need it easy. It's trading. Damn it. Investing.com has ads with dog food. It's like it knows, right? It's like it listens to me talk about my new dog. What's up, everybody? Good morning, YouTube. Message text support channel. You lost rolls for the Zoom call. All right, just message Slacks directly. He'll hook you up. There's a bug if you update to upgrade the lifetime. Cancel your other thing. The cancellation supersedes like the order at which you do it. It's like you move to lifetime, then you cancel your other thing, and our website is dumb and goes, oh, you canceled your service, so it rolls away. So we're actually the next patch is fixing that too. But we'll just have to give it to you manually. So we try to catch everyone before it happens, but I got you, bro. Slacks has you. Oh, here, I got it for you. I give it to you. I got you, Frank. Happy Thanksgiving to the YouTube algo and you guys. Love y'all. What's up? All right, Zoom, everybody. I'm telling you, Zoom, get over there. Get over there to YouTube. What is going on with YouTube? YouTube chat is frozen. All right. How do markets trade on holidays, you may ask? Well, the last two Thanksgiving Fridays, so this is Wednesday, is going to trade like a normal day. However, we got a lot of news coming out today. So remember, today's going to be a big day for news. We had durable goods in the morning, came in relatively flat. No change there. U.S. domestic product GDP quarter over quarter, which is one of your two major things to know if we're in a recession or not. When you're in a recession, your GDP quarter over quarter growth rate will be negative, like 2021 recession. Right now, it's very positive, which means they're stimulating growth in the economy. Now, per capita GDP, right, we look at these things. How's the jobless claims looking? Jobless claims relatively normal. That's good. Initial jobless claims, relatively, nope, I have that on twice. All the Thursday data is getting squeezed out today. Where's continual jobless claims? There it is. Get up in 1 minute. With these under 2 million, which is pretty normal in a bull market, and they're increasing a little bit. It's fewer and fewer people able to get a job, at least since January 2023. So this is like people falling for unemployment. Means they were laid off for non-performance reasons, looking for a job, and they're continuing to file for unemployment after the first week. So that's been steadily on the rise, but that's not abnormal because 2 million has been average in most bull markets. So the reason it was so low back here was after COVID. Everybody was getting hired back. There was a huge hiring spree right after COVID. So numbers a little skewed, even though it's trending up, it's still within the realm of average inside of a bull market. People are getting scared of these numbers. I've been trading long enough to tell you 2 million is pretty freaking normal. Even in 2010 to 2020, the biggest rally we had, like it's 3 million, 2 million, 2.5 million, too. It's pretty normal. All right, market's open, and don't forget, we've got some economic data coming out pretty soon today. PCE coming out in about 30 minutes. Pending home sales, important. Crude oil inventories, because it is a Wednesday, the EIA number coming out. All right. So we'll check the open here. We are trading in between on futures, right above MHP 6032 on SPY. Good morning, y'all. All right, that's yesterday's liquidity map. Let's see what we got going on here. The SP is opening with negative resilience. Okay, you guys know the drill there. Resilience is a gap fill predictor. This is, let me make this really big. Super big. All right. So half gap is resistance. Resilience less than 0. We are coming down right here. Well, hold on. Blep. How we doing here? Oh, bulls on bottom. Yes. Okay, perfect, perfect. Oh, God, such an easy day. Such an easy day. Oh, God, you guys know this one. Resilience less than 0. It's resistance from the middle. Open, blue open, BLU, trade 1A. Oh, that's one of my favorite setups. Ooh, baby. Ooh. So, tell me really quick. Are you guys digging the lo-fi slow jam, or do y'all like the generic techno as far as copyright-free music goes? I'll let y'all vote. Also, we're going to do a contest. You know those... Okay, I forgot. There's another Black Friday contest we're going to do. You guys know those AI bots that write music? You know... Tracer Matt has the Nasdaq Cowboy song that's always stuck in my head. All right, so go out there and make me an AI-generated song of any flavor. And we will give out a prize to the person who creates the best song. A pretty good prize. I'll think about what the prize is. Y'all want the heavier techno? No, the data is not messed up. The data's fine. We rolled back to our old data package while our data providers are working on our specific thing. You're gonna see lighter candles. That's it. So this is to debottleneck the issue. No, not like slower, like less volume. That's it. But you don't need the candles to rock us. We don't use charts, right? So you don't need anything. So you know what the active last pretty much close trade price was. All right, QQQ. Chase, this is the data from way back in the day before we switched. Illiquidity pocket on Nasdaq. This is perfect. I love these setups too. Here to here on negative res. This is good. S&P resilience is now flipping positive, which is also really good. So Nasdaq has support at monthly hedge. SPY has support down here at bull zone, which is great. SPY resilience getting slightly better. I like it. I don't hate it. It is starting to move. All right, I do like it. Is it MHP? Whatever. Let's just tap it. BLU to DD on positive resilience. Yeah, let's go. Let's hit it. Nasdaq is negative, though. That's the one downside to this. The Nasdaq resilience is negative, so Nasdaq's going to be pulling back just a little bit. Add the best music. Looking at this, Nasdaq has that pressure to the downside. Keep an eye on S&P. The S&P does look good. Doesn't look too bad. Yeah, let me give 1 second here. Oh, I am in a little early on this one, huh? One second. I did get in a little early on this, but the resilience is still good. So, problem is, I might experience a little drawdown. I did hit this a little too early, but I'm good. I'm good. Wait 1 second. 85% of, or sorry, 90% of days will close. 90% will close above MHP. That's where I wanted to be long. Seems to make you want to go to sleep. All right, let's go to the generic lame techno. All right, I'm long. Let's take it. The question is, how long do I want to be on this one? PMI in 5 minutes. I usually hate trading into news as well. What do I want to do with these? Let's be honest here. I did jump the gun here a little bit. Come on, hang in there. Hang in there. It's good. It's good and bullish. I don't have any doubts about this one. QQ at lower DD band, which is good. I want to see that bounce. That's one reason I was trying to get in on the long side here as well. 88% of days stay above DD band. 88% of days will stay above. Only 8% of days will crash out. S&P long and strong. NASDAQ really bad. Who wins the fight? I always bet the S&P wins the fight. So, fingers crossed there, boys. We're keeping an eye on this now that data's coming out. Boy, do I want to just coin flip on this one. How much drawdown am I willing to take to be right? I feel like I'm going to be right on this one. I feel like this is going to be big ups days today. But the news can come out and shake to there and then move. So that's one thing I am worried about. That is my one concern. Let's trim. Am I feeling good for the holidays? PMI coming out pretty soon. Resilience is dropping pretty heavy on NASDAQ, which I don't like. So what if I'd be such a wuss and I just trim? Give me some room to dive back in on this. Resilience is still good enough. I'm gonna let the S&P dip. Let me just trim a little bit so the S&P can dip and I don't get squeezed. All right, I'm dropping it to 2. I'm gonna hold through the event because I can sustain the drawdown. I'm fine on that. Not a big deal. You guys know the drill here. Again, when the data comes out in 3 minutes. So typically, you get 2 really awesome trades set up. DD ratio greater than half. It's good. So 90% of days will support here by the end of the day. The 80% of days will support here. So if I were to drop 15 points, $1,500 down on 2s, I can definitely hit that drawdown. I do want to be in it because I'm willing to take 1,500 drawdown. So I can double in right here and hit it really hard. Yeah. So I'm reducing the size of my position because I wanted to get it to move slightly higher on the open, and I did get a kind of like a crummy entry here. So I just went ahead and trimmed it just a little bit so I can dip and I can get back in. Like, I don't hate it. Resilience nice and strong. We're at the bottom of the box. Means we do want to break out. Res greater than 0 wants to move higher from here. Nasdaq has support at lower DD band, which is also pretty strong. We're hitting MHP support right here. 34 to 81. That's about 48 points. Upper DD. Wow. Okay. $604 tonight. No. 605.4. What do you think? I normally don't trade through news, so I lowered my position size to do so. So it's not normally something I would ever do. But the market is just so strong and bullish, I don't expect it to sign. If it does, I get squeezed and I'll be wrong, and then I'll just get out and then long it again tomorrow. I'm feeling it. It's feeling good. Res is strong. I'll be right back, guys. Hold on. No fear about this one. It's looking good. Be right back. All right. Oh, it's looking good. Ooh, baby. Ooh, baby. Oh, man. I was having my hair looking crazy today. Looking like an 80s rock star. Let's get that up. Yeah, nothing much from the news. Oh, yeah. We got the ETF rules last night. Doesn't say they're against dollar cost averaging. I don't think Apex stopped caring about DCA in their last roll updates. Yeah, you always want to ask them. Oh, there it is. Let's go. Let's go. Let's get the big ups. Let's do it. S&P res is positive. Res. We can say res is never wrong. One of our favorite sayings here. Keep an eye out. Positive res. You can support the box. Support the box. Now, the only thing that can bring this down is news going the other way. You don't hate it. Let's watch it. Okay, let's see. Look really quick. Straight up, pretty decent setup. I don't hate it. Jobless claims, decent. Trade balance, less. Okay, that's nothing crazy. Is the PMI data not released or something? We saw like no activity. Is it delayed? Let me get old financial juice and check it out. There it is. Okay, what else do you have going out today? EC 11 minutes. That's going to be kind of a big mover, I would say. do you guys think? We moving up today? Nasdaq trying to get better. By the way, do you guys remember? Morph, right? One of our mods. You guys helped him out not too long ago. He's developing a rideshare app. Right? Can I show you something? Hold on. Guess what he made? And he's offering to give it to you guys. Watch this. Watch this. He did this on his own. He's a developer. He makes stuff. All right, ready? Are you guys ready for this? Look what Morph made. And he wants to give this to you guys as a thank you for your generosity, helping him. He has a rideshare company. His car broke down, and he offered to, you guys pitched in. We made a little crowdfund thing. Everybody pitched in, helped him get a new transmission for his car. Look what he did. These are all of the gaps and half gaps, and you have the top 10 NASDAQ, the top 10 S&P, and you can look at a glance to see where all of the stocks are, which ones are right at the edge, which ones are above half gap, which ones are below half gap. Yeah. He's offered to give it to us. Which stocks are pushing it right now in the top 10? Tesla right on the edge. Google right on par. Microsoft below. Apple below. Top 10 in your ticker. Set up a watch list and do it. So imagine you wanted to see that. Nvidia way to the downside. Meta way to the downside. Now, of course, any app that we do release, when we say he wants to donate it to the group. So what we're going to do is little add-ons will have a small cost because it does cost money to run them. Small, and I'm talking small. Little add-ons. This will be our first add-on for Rocket Scooter. It might be incremental. I'm talking small. Like, we're talking like on the $10 or less range. Something small because the server costs go up. If we keep cramming stuff in, the server costs get crazy. So what I'm going to say is, if we do add something like that as an add-on, Lifetime gets all the add-ons for free. So as other people develop indicators and tools for our platform, you'll be able to buy them from everybody. But he just said he wanted to give it to us. So and that's why you treat people well, because people are ultimately good. And I like that saying. All right. Resilience is starting to kind of pull back a little bit. I don't know if I like to trade as much, but I don't bet that the market's going to sell off. I'm just kind of hang on this. But the problem is I'm not at a good support here, and I probably want to stop with this position. If it doesn't hold. So this might be the first add-on we get for Rocket Scooter. And if it was like an incremental thing, like a $5 a month or something, would you guys like that? It's for stock traders, right? Or even for the index traders. You want to see what the problem children are. It's such a cool interface. So, I was like, dude, well, we want to reward you for your hard work. He's like, no, that's okay. You don't have to share anything with me, man. I was like, well, you're a developer, right? I mean, we want to at least support your effort and you build something, right? So this is super cool. Nvidia continuing to sell. Resilience is bouncing though. So again, I'm scared, but not too scared. Problem is I did get in a little early. Yeah, the look, right? The functionality is great. You type in a ticker, it shows you. Basically, it's just graphically showing you that, right? You trying to move lower, right? And you can see like Nvidia and Meta are the ones that are moving the farthest. Top to NASDAQ. Your big tech is selling off way below half, like relative percent wise. Like this is clean, dude. I'm like, as is. I might just iframe this. What if we don't have 2 to 3 dedicate the charts to the open, do the working 9 to 5? You don't have to have 2 or 3 charts open. You can put everything in one chart. And as a matter of fact, you can pop out a window and add it to another tab. Or what we'll eventually do is open up the multi-windows like TradingView has. So that you can pop out different windows inside of the browser itself. Is it real time? I believe it is. Let me double check. Is it ticking or changing? Let me see. NASDAQ top 10. Oops. Refresh that here. Energy top 10. Oh, that's cool. Financials top 10. Okay, market. Don't be crazy today. It's coming out in 5. Did I break it? I think I broke it. Anyways, it was working. It's an incredible design. And Q's a bone anchor today. Yeah. But fantastic, right? Amazing. Are you talking about the tool that he made? It's just to understand like what are the problem stocks. And so when we look at resilience being negative like this, the answer is quickly is like, okay, what stocks are dragging the index down? It already told us, right? Nvidia and Meta, right? They're the furthest below half gap. And so they're the ones that are dropping the market today. So a tool like that lets us see very quickly where the problem children are. NQ is making an attempt to break DD band. Yeah, so I'm betting that the NQ DD band holds. That's kind of like why I'm in the trade right now. Like, I don't hate it, right? %8 of days will close. Close. In here. 3 minutes till news. I don't hate the idea that we're at bottom DD band. I'm not betting on a market crash today with the S&P resilience looking pretty solid though. Resilience is starting to drop below 0. So let's see what we got. Either the news is going to move us higher or we're out. So anyways, below DD band, I don't do anything but find dips to buy back to band. So today is a collapse date, then it is going to be what it is. I don't think it's going to hit. I think we're going to hold. Monthly maps are too bullish, guys. Oh, yeah. Kirsten's on the same page. Good news we fly. Yeah, I think so. I'm not against that idea. VIX is in a state of you shouldn't have too many overshoots. Again, the market sells off. It sells off. You know, we can't predict what the irrational, crazy market's going to do. But we take some bets. Let's have some fun here. Here we go. Market's moving. What do we got? Dude, I'm never gonna get used to that shit. Fucking A. Oh my god. Come on, NASDAQ, let's go. DD band long accuse. AQ, let's go. Come on. Let's move. Just one. Come on, hang in there. Come on, baby. Brazilian says they're on the fly. S&P is negative. Let me... Not the best. Not the best. This is not good. If it loses, I'm out. So I'm going to wait on this one. I want this to hold. I want the 88% to hold. We should be having overshoots, but let's. That PMI came out a little bit low. S&P falling to bull support. Let's hit it. Come on, come on, come on. Get on. Get up here. Okay, no good. That's not good. Volatility's there. Let's go. Hold up the band. Let's go. Hold the band. Get back up. Yeah, so just waiting on the original plan. No, I'm just waiting on S&P doesn't break hedge pressure, right? Good. We're good. We're good. Come on, NASDAQ. Let's go, baby. Let's go. Let's see that green on the board. Green on the board. Come on. Come on. Hit that hedge. Don't break hedge. Don't break hedge. 90%. Close on the same side. It's right above hedge. Big up days. Big up days. Let's take it. We got 2 on the board here. Come on, S&P. You got this. You got this. Come on. Come on, NASDAQ. ED ratio is good. Take the float bet. We know it. I long every single time. I long it every single time. Every single time. How to reduce your volume? Dude, financial juice alarm. That's what it was. Come on, NASDAQ. Oh, come on. I'll take the scalp. Fingers are crossed. Hang in there. Come on. Hang in there. Don't squeeze me. S&P resilience is negative. So S&P is trying to fight. Monthly hedge break is bad. We want this to support there. My fingers are crossed. I'm taking the bet. We shouldn't overshoot for long. About 1 or 2 minutes, I'll know if I'm right or wrong. If I'm wrong, I'll just close the whole thing out. Fingers are crossed. Do we hold, guys? Resiliences are negative, so that's not the best sign of the world of big ups. I might be pressing. Let me pocket the NASDAQ profit in just a second. I'll get back in as soon as I get confirmation things are moving. We need that resilience getting higher, and S&P is not giving us love today. Hold on. Oh, there it is. There's the resilience. Yum. All right, let's do it. Come on, NASDAQ. Hang in there, baby. Hang in there. Hang in there. Volume starting to pick up here. Oh, what a day. Resiliences are good. This is good, baby. That's good. Oh, I saw my yes trade. Good, good, good. Okay, let's hang on to that one. Scalp NASDAQ to put some cash in my pocket. Resilience is positive. Yes is down here. Now, properly, so this is support that I want to see. I could get squeezed to there. I was kind of taking the bet. I'm in early on the trade. That's one thing I don't like. I'm in way too early on this. Resilience, baby. Resilience is positive. What's up, guys? Yeah, I should have waited for the original plan to tap at a hedge pressure. That's kind of the one downside sadness I have today. All right, I need to get above MHP or I'm going to feel sad about this one. Okay, you know what? I'm going to trim. I'm going to trim. And I'll long heavier when we get the break. So right now I was actually betting on MHP, which is the stronger of the signals. In Q, we tap in bottom again. Oh, let's do it. Why not? Why don't we just hit it hard with NQ? Let's do NQ today at DD band. That's the stronger trade, I think. It is the stronger trade. Or the stronger support, not the stronger trade, but the stronger support. Resilience is bad, though. It's not looking super hot. But I'm going to take the bet anyways, because I still take a bull bet, even when I have bear things going against me. I only bet small. I'm only hitting it small with 2. Nothing crazy. We'll take it. NASDAQ is a pretty solid reversal point from here. Now, again, I could get squeezed if I'm wrong. But we'll see. I always take the flow trade on positive DD. DD ratio greater than half. I like to take it. Sometimes it gets like real knife fall, catch, you know, knifey catchy folly. Sometimes it gets a little scary because it gets a little volatile here. But I always take the flow trade. Always do. Every single time, boys. Every single time. Never not do what I'm about to do right here. Every time. Fingers crossed. Fingers crossed. It's trying to sell. It's trying to sell because the stocks are getting hammered today. But it's a really strong trade. And the problem is how much drawdown will I take to ultimately be right. VIX is really low. relative, right? We're VIX below triple B, so we're not gonna have a lot of, hopefully not a lot of overshoot, but man, breaking DD can get very violent. So at this area is a good place. See how it's trying to fight here? That's what I want to see. And it's still trying to sell because the stocks are looking kind of like gross here. But the S&P market cap is flexing up through the box. So S&P wants to rally. The S&P wants to rally. Wants to rally. People in chat saying it's coming down. Well, if it comes down, there's no way I'll be able to know. I'll react if it does. But I feel pretty good, at least for now, that it's trying to fight off any sell-off. But it's not getting the momentum I want, which is the one thing I don't like. I want to see a little more momentum on this. It'll go if I'm wrong, I'll be wrong very quickly. If we lose this, it gets, see how I got violent here? Yeah. Fingers crossed on this one. We don't bet on market falling apart. But if it does fall apart, I'll get out pretty quick. Come on, NASDAQ. Give me some love. Ah, dang. Didn't work. Okay. Boo. Oh, there's the wick. Okay. Come on, NASDAQ. What's up? What's up? What's up? I just got 2. I want to survive about $1,500 of drawdown. If I write this big ups today. Again, resilience is positive. No fear on this market, y'all. I don't have any fear of this. It's looking pretty solid. It wants to hold. It wants to hold. It wants to hold. I trust it. I trust it. Come on, SPY. Hang in there, baby. It's trying. It's trying its hardest. Just getting soaked up. Oh, yeah. Right on point, too. Resilience got slightly better in the S&P. It sure is. Yep. Come on, NASDAQ. Hang in there, baby. No, this is not good. Needs to recover. That wick needs to get us back up above. Come on, NASDAQ. I don't normally hold for long in this state, so my finger's on the button here. I don't want to look. I don't want to look. NASDAQ, why you hate us today? This could get pretty bad. Okay, I'll get long when we get back above it. Let me give it like 1 more minute. I'm gonna trim. $40 points is my stop. Yep, that's it. That's it. Come on, shorts, get soaked up. Nope, no good. $1,500 is about my limit on this one. All right, I'm out. Okay. I'll get back long right on the upside. When we get back on the other side of it, I'll long it again. Okay. So it didn't support. We're in kind of the weird state now. So, but the S&P still wants to rally. So what I'm going to do is I'm going to dive right back in on the S&P at its full support. So the NASDAQ support didn't work. I'm going to let it fall a little bit further. I'm out of the way. So now I know it's falling. We get a nice, decent support S&P at hedge pusher in just a little tiny bit right over here. When am I moving? in December. Guys, I'm going to tell you something. This means we're here at some point. I'll let it go a little lower so I can grab it, but we get out of the way. Hedge pressure break, you don't deal, right? So if we get back above here, I'm back to longing, so don't worry about that. Well, we're gonna wait for that one, right? Let it do its thing, let it fall. Take a tolerable loss. I made what, 45, 45, and 55, and then I'm down $1,500. Not bad. Take some losses here and there, but I'm gonna wait. I'm gonna wait for the break to take it long. I don't short this, but I will let it fall. Hedge pressure SPY. It's gonna be a strong bounce. We'll just let it flush just a little bit, and I'm gonna tap it again on SPY whenever I get to my supports here. So we're gonna wait for this one. BLU setup is really strong. So from here, we have about eight more points drop on ES. So I'm going to sit out here. Actually, sorry. 18. Right here. Why don't I short it and then long it? Why would I short a bull market? That's the question people always ask. Why short it then long? So I'll tell you why. I have a really high win rate when I trade because I don't do that. That's the one thing you got to do is whenever you realize the market's likely to fall, there's no benefit jumping in on the short. I'm just waiting and preparing for the long that I want. That makes sense. Does that make sense? Because it's still not a bear market. There's nothing bearish about it. This number is bullish. Monthly map is bullish. Or above MHP is bullish. Resilience is bullish. All the signs are bullish. So I'm just waiting for my bull pivot. While it's flushing out some longs right now, I'm going to be the first bull back to the party. Right here at some of my levels. Yeah. Let it move. Just let it move. We'll let it do its thing. Nasdaq outside of DD band though, the only thing I do is I'll usually will take a long trade off of red lines, which I don't have my Thinkorswim is not open. Nasdaq does have a support at MHP. So that is one thing you got to watch out for. Breaking DD band is bad. So I get out of the way of that. There is a small trade support from here, 2707. It can fall pretty decent today. But the S&P just doesn't have it. The S&P is looking solid enough, but Nasdaq stocks are just yanking us down. So I'm flat on this one. We're going to wait. As the market flushes, I'm going to get right back in on the long side because it's still bullish. I think that's the whole point. Yeah. Day didn't warn you, so wear a white shirt. So 9 out of 10 times this 8 out of 10 times this trade will work. So we are near hedge pressure. Oh shit, I'm still long my S&P. Thought I flattened I flattened Nasdaq. Okay, well, look at me. I saw S&P on the table. Let's see. I'm adding to it close to hedge pressure. So I got 2 on the table here. And I'm willing to hold this through here. I'm gonna take the 2 through whatever drop. There's so many like quote unquote every single time trades I love to take here. I trade from here up. I trade from here up. There's a lot of dips here. I trade from here up. So I'm gonna wait on this one. Keep a small position. I thought it was already had line that, but whatever. Touch Nasdaq again. Get right back above here. I will pop my Nasdaq long. So let's wait on that one too. UQQ on MHP. So let's watch MHP 2800. Usually will hold. Illiquidity pocket. MHP loves to hold. Should I? Let me take a stab at it. Forgot about it. Nasdaq does have, now even though it's the biggest mover, Nasdaq does have some really solid pivots today. So MHP right now, Nasdaq is where we are. Let me go ahead and mark that on my futures chart. So 505 is here. I would be very, very, very surprised. So MHP back to DD band is the trade setup right here. At least now, I usually will buy strong pivots, MHP being a strong pivot. You guys remember that from the classes. And trade it right back to DD. So at least right now, there's a quick little 30-point rush in NASDAQ. We'll take it. If I can get it. Hope this one of these days are like, see how the pivots are starting to hold? There's the volume. So we'll see if I get it. Trust the process. Kind of a struggling day though, with the Nasdaq looking as bad as it does and the S&P still looking good. It's just like a pre-Thanksgiving flush. Tech is getting hit hard, but MHP loves to hold. We don't really bet that it doesn't. Some little scalps here in Nasdaq. All right, Zoom, head over to YouTube. We're going. Head on over there. Hang out with us today. Zoom call's over for early morning Zoom call. Let's let S&P, hold on, ENQ here, hold on. Come on, Nasdaq, hang in there. Hey there, MHP, this is it. If this breaks, then the market's just going to shit on itself today. Market's falling pretty quick, but this is the last bull pivot that we have. So if this one doesn't hold, then I'm pretty much done for the day. It's going to be like a brutal day today. This guy right here is the last bull pivot. Market gets crazy on the other side of this. I'm about to give up. All right, fuck this. I'm done. Market is crazy down here. So this is like basically really bad if it does not hold. Crazy if market holds here. Well, you expect this 90% of days should hold this. Come on, baby. Come on. Boy, that's tough. This is a tough day. 10. So I usually take the MHP bounce back up to green. So I usually trade from here right to there. This is a really high probability setup from here to there. Now to bet, if it gets back above here, this would be great. S&P resilience is positive, which tells me this market does not want to sell off. We are rotating very heavy. People are dumping tech stocks and running into everything else. Like, this is going to be a surprise rally at some point today. But the problem is when. And Nasdaq is just melting, right? But people are rotating into the other blue chip stocks, the other sectors. Watch, if I can load up the sector checker here. This is a pretty brutal day. It happens. Look at this. See, look. People are just dumping tech and going, everything else is so bullish right now. Just tech. Tech's the one's getting obliterated. Right. It's usually just, basically, it's just the market cap weight of the tech sector. I mean, that's what's really dragging Nasdaq down. The S&P resilience is getting even better. People are dumping tech. Literally dumping tech, jumping the S&P. Which I do want to trade. Some of my pivots here. Don't forget, guys, smash that like button. Now, it's really crazy, right? But again, you can't argue with resilience being so strong. The other stocks are doing this. Gonna let Nasdaq flush really quick. SPY hinted support. Like SPY, as soon as SPY hits a support, I think it's gonna look all right. This is pretty brutal. Breaking all the things can be bad. I'm out of everything. I ain't touching this. So as crazy as it gets, anything above MHP is back. So basically, stay away, right? Stay away. I'm gonna stay away from Nasdaq. And I'll probably tap some SPY whenever we get to the level I want to get to. Yeah, like SPY res is going negative again, so gonna stay out of this one. The market was trying really hard to hold. Look at that bull zone. I'll probably take that one last trade. I'll do like one last hit. About 3 points lower. P. But yeah, things are just bad whenever you hit these levels that you don't want to like lose those. All right, so SPY is barely moving relative to the Nasdaq today. And again, SPY is hanging on. So little like I said, little pre-Thanksgiving flush. Let this thing move. But I do think we're back on top. So we'll see. The thing is that every once in a while, like one day out of the month, you have a big flush day. So just react to it, right? Every other day is golden, then you have a really crappy flash month. I'm just not going to bag hold on the way down. So I'm going to let the market sell a little bit. Oh my God, I need to mute this. This is driving me crazy. Oh, crude oil inventories. How do I didn't mute that for now. That scares me every single time. Oh. ETF delayed your payout? Did you do DCA or what? I didn't put micros on here real quick. This is a pretty brutal market day. There's no long, strong pivots, CD band break. Market's irrational. I mean, if anything, small. I got micros ready to go in case I want to touch this. SPY is at a really strong pivot. Bull zone, this is the last chance pivot. Now, again, SPY's data looks great. The Nasdaq stocks have been flushing for the most part. SPY has really strong pivots here and here. So I expect that. I also take this trade every single time as well. Ooh. How come you can't dollar cost average? Some of them have different rules. That's kind of the crappy thing about them. Some of them have different rules, and a crappy thing about, not them, but like trader funding programs in general. They have just like complex rules that don't allow you to do certain things you normally would do. But that's kind of like the rules of playing in the casino, you know, that's kind of the way that it works. MHP break on Q, DD band break on Q. That's pretty brutal for the market. Now again, with the rotation in the S&P, I do expect the market to move up. I do expect it, 100%. Like I said, I expect the market to move up, but we'll see. This flush is pretty gnarly, but the S&P has been holding the fort all day long, like all day long. Nasdaq's been selling so hard though. It's just not catching a bid. The S&P is not getting any momentum. You know, pre-Thanksgiving selling, that's making it a hard day today. How long does it take to learn our system? Probably about like a week or two. It's not hard at all. Our stuff is pretty easy to learn. Well, I go with ETF. They're like the affordable side of things. They're a little cheaper than the next guy. I'll just sit down and watch this market burn today. If we get back above some of my really solid pivots here, I'd be willing to get in and take a long. But it is not catching any kind of bid here. Let's look at Nvidia and Meta. Those are the two stocks that are selling off today. Nvidia hard. Watch. By the end of the day today, again, I could be wrong, but I expect some once this selling of stocks over, as long as the S&P resilience is positive, this thing is going to try to catch back up. Now, again, Nasdaq is still getting sold pretty hard. That's the sad part. But we'll see. I got squeezed on this one, so I'm not even going to touch it anymore. But we're outside of our comfort zone here. So one of the rules we have on this thing is no trade below MHP on QQQ. Sit out. Nothing here. There was a small trade from here to here, but it didn't play out. If I reclaim this, I'll take the long back up to the upside. There is a small trade here. If it breaks, to again go back up. But down in here, no trades. Even if that looks like it's falling, I'm still not going to go in there and take a long. My long attempts failed. I get out of the way, take a couple losses, but you know, like I said, I made 15 grand the last 3 days. Losing a couple thousand, not a big deal. Part of the game. So, let it burn today, but man, this is just crazy. So, basically, the unexpected thing that was going to happen happened. The thing is that S&P is falling to key supports. Now, today, on the S&P, this would be a nice trade to get in on. But, super brutal. I kind of don't want to touch it because Nasdaq is now in a very bad spot. Bringing MHP is bad. If Nasdaq reclaims here, that's a good long setup. No one could have predicted this. This is unusual. This is about 10% chance happening. And of course, like, you know, I think I have a losing day in the last like 2 weeks. I think today's the first losing day I've had. So I'm going to let it burn. I'm not going to care. I'm not going to try to overtrade this, but kind of let it fall. All right. Resilience still positive. DD is strong. At some point, this is going to want to rebound. Now, again, if the stocks themselves fall out, I have never seen rotation of such magnitude. This is the weight of tech inside of the Nasdaq, right? If you look right here, it's crazy. Look how it is. It's one sector, for the most part, selling off. Tech is getting sold so hard, and people are buying everything else. As soon as that tech stops selling, you might see a big rebound. Again, we don't go in there and take big bets like falling knife. We have the evidence of a falling knife, as you see. Right about here, I got safely on the sidelines and watch it continue to fall. Right? Like we don't usually trade outside of this DD band. I only took one additional trade from here, which is a very small long potential from here to here, and even it didn't hold. So this is all sit out for the most part. And I trade only strong long pivots. So basically now my trade here didn't work. My trade here didn't work, and I'm just kind of waiting. The only way I'll ever long this again today is if we reclaim here or if we reclaim here. This is out. So today, unexpectedly, as the market is pretty random, the strong bull market, it got toppled by a bunch of Nasdaq selling. So let it move today. So no, the S&P, I got in at a bad spot on the S&P instead of waiting for where I actually wanted to get in on, which should have been right here. So the S&P, my target for the S&P would have been right here. But I got in at a bad spot. Well, not really a bad spot, but I got in a little early. There was not much drawdown here. This is like 5 points of drawdown. I was willing to take it. But as Nasdaq started falling apart, it's just kind of like, man. Now here, the S&P will likely catch a bid from here to here. and then trade back up. Like I'm not gonna lie, I expect this to happen today. I don't think this is gonna crash the market, but we'll see. We'll see. We're gonna wait on this one. So normally I expect the market to do a certain amount of things. This kind of setup, really long and strong setup, melted through all of it. So we're just gonna let it do its thing. Brutal days, but it happens. I'm telling you, that S&P is likely to hold today. But we'll see. All right, it's looking pretty clean, but I think I'm gonna scare myself out of this one and not touch it. It's a pretty confusing day, and sometimes the market's just gonna be random and silly like that, and there's really nothing you can do about it. But react. Johnson, head back down. Yeah. Is NQ's becoming hedge for sure or not? Yeah. So normally, let me give you some rules of thumb while I'm just kind of chilling here waiting. So again, probabilities are probabilities, right? Market's not 100% perfect and predictable. Market's pretty random. Probabilities are as such. 88% of days will close inside of these bands. 8% of days will close down here, and 4% of days will close up here. I use this to my advantage, and I win a lot of my trades. And then, of course, if you lose that setup, you just take a loss and call it a day, at least for me. One of the rules is anytime I break DD band, I'll always take a strong pivot back up, which is MHP, bear zone top, bull zone bottom. I always take this trade. I tried to take it. It didn't work. If we reclaim it, I'll probably take it again. I take this trade every single time. I take this trade when DD ratio is greater than half, which it is. So essentially, all of our stuff practically got obliterated today by the sheer amount of selling in NASDAQ. All the S&P stuff, very positive, very positive. Market was good. I wouldn't be surprised if by the end of the day, we are up here after this massive amount of flush. But what it is that you know, I take a loss and get out of the way in the danger zone. When I lose all my strong pivots, I'm going to sit out of everything down in here. I'm going to sit out, like not touch anything here. If by some reason we are here, I'm long and strong as long as I can get. Right. So I just basically when the bull market fails and like doesn't pay out, I'm just going to like get out of the way until it gets back to structure. When it gets back to structure, I'll probably make everything back that I lost in a single trade. So that's kind of how that works. Don't trade in the danger zone. S&P resilience does not lie, though. This market wants to be bullish. After this flush, it's probably going to rally. But we're going to have to just see how this works. I'm going to take a bathroom break. We'll be right back in just a second. All right, we're back. Want to get a Top Step account, get on the leaderboard, lots of coverage for you, and folks familiar with what you do? I have a leaderboard on Top Step, don't they? Yeah. Not a terrible idea. Okay, so, that QQQ. Like I said, I'll tap it right when I get... If I get back above MHP, I'm going to get on the long for sure. I don't catch a falling knife in the sit-out range. We will take the bat on that one. If it does go above. Yeah, NQ resilience is heavy downside. Why not take the bull zone bottom? I can. Let me see. Well, because a couple of things, right? Every time you lose bull confluence, I talk myself out of a trade. DD band break, MHP break, that's two like no-nos. I know I take it every single time, but I've kind of talked myself into a zero position. So normally you have hedge break, MHP break, DD band break. Any size position goes to a sit out, Chase. So when I say I take it every single time, that's granted that I'm allowed to trade. Right now, the sit out signal is long. So you guys remember yesterday position sizing, right? I normally take this trade to here every single time with some position. So we had hedge pressure break on S&P, MHP break, and DD band break. So everything's broken right now on NASDAQ. So that's 1, 2, 3 things going against me. If I were to touch it at all from here, it is a very, 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 it's like one mini, if anything, from here. 599 to 598. Okay, I can try it. but I'm going to show you resilience is now negative on the S&P. The S&P is now starting to fall a little bit. So we're kind of doing that today. I've got to talk myself out of doing anything. Yeah, it is a training day today for sure. I might wait for this to here. So normally I'll take the bull zone bottom back to head shorts to the BSU, this one right here, number one. But the thing is that also the trade is not that much here, right? So number one on that setup, there's not much movement here, so I'm still not touching it. Hold on one second. He's here. All right. You're behind me. Look. Fiberglass panels for the new studio at the new house. So I have this like completely like soundproof room. You can't see on this side. There's not anything there. But over here, I have fiberglass panels. To make it sound like real dampened, like a movie theater. That's 6 more fiberglass panels right over there. Oh, I just got delivered. The dominant thesis is to go up in the PM, yeah. I'm not touching it for sure. So basically, all the things that I have me sitting out. Now, this is a lost day, right? But you guys see me. I probably had 2 weeks of winning days. Right? It's been pretty decent. Pretty decent. Like, this is like my first losing day in a while. Maybe like in a week or two. I don't think I have, in recent memory, I've had a losing day in the last week or greater. So, when everything falls apart when it shouldn't have fallen apart, what can you do about it, right? If I were to take one mini for like educational purposes here, I would. However, our position sizing rules. Every single time I lose, it's like bulls have a checklist. Every time I lose one thing on that checklist, I trade smaller, smaller, and smaller. So right now, all the signs, all the signals I have are kind of like, oh, so then, by the way, we're no longer going to be neighbors because we're leaving Montrose. We're not moving too far from you, though. So my Thanksgiving plans, right now we're hiring movers. Right now I've got new, like, $2,000 worth of fiberglass panels sitting behind me for the new music studio, or I call it the music studio, the videography studio. So the new office is gonna be decked out like twice as good as this one at the new house. So right now I'm getting everything together, planning everything, calling movers. We're moving on the 15th or something like that. Or we're closing on the 14th. And then we're moving like slightly after, like somewhere slightly after. Like we're trying to organize when we're gonna move right now. No falling knives today, you guys. Inside of here. If I reclaim my bull levels, I jump back. So people ask me why I'm not flipping short. Let me explain something to you. Stay here till the end of the day. You will see why I'm not flipping short. It's a bull market that fell apart. It's not a bear market. I don't even care if the market sells off. Trust me when I say you watch me do 450% in a month in this ETF contest for a reason. I don't flip short when the bull market falls apart. I just take my licks, walk away, let it settle out. If it becomes bullish, which is a very high chance it can be where it wants to be, these trades are going to be worth tens of thousands of dollars they play out. I'd rather wait for the market to regain the bull structure that it wants and then take it. If the bull market fall, like as it was falling, you see how it was like trying to support here and trying to support here with high volume and high volume like we always talk about. Problem is the selling was just too powerful to overwhelm the structure. Okay, but whoever is liquidating today is going to finish doing that at some point. And the market's rotating pretty heavily out of tech and into everything else. So if the market catches a bid and rides up, it's days like this don't like do this often. Days like this, just stay out of the way is my rule. And if we reclaim these really solid spots, I get back in on the probable side. 90% of days will close above this orange line, which means 10% can be down here. It's totally fine. This is a 10% day. I stay out of the way. Here to here, this 88 plus 4, 92% of days will close. Again, will close. Doesn't mean bounce. It means we'll close. By the end of the day, the probabilities are there. So by the end of the day, we're here, and the end of the day, I'm back in. So in the small percentage of things, I'm going to sit out. Literally sit out. No position. I took my licks. I'm done. But I wait. And then when we train people, the Discord link stinks. Doesn't work for you. Wait, which Discord link? Which Discord link are you trying to do? And so if you get like a big nasty red day, I'm just not out there like hemorrhaging my accounts and blowing up. You know, take a little loss, get out of the way. Made 15 grand, lost like 2,500 bucks. Right? That's like the last 4 days of trading. It happens. So I'm going to wait and get a better trade in a little bit. Which, wait. Bro, which one are you talking about? Which YouTube link don't work? So right now, no catching falling knives. The thing is I wait. In a setup like this, I wait for confirmation. There's no trying to catch the dip. This is a confirmation play now. I only... And then here's how we went through our risk management class yesterday. Watch. So in long trades, I either take a normal trade, a medium trade, which is half of normal, and a small trade, which is a tenth of normal. That's it. Or I sit out, which is 0 of 10, whatever. At the start of the day, certain plays have really high probabilities, right? At the start of the day, we take our greater market. We look at these particular relationships. TD greater than half. Check. Hold on one second. Then we have monthly map is bullish. Okay, so bull, bull, bull. So when all three things line up, I usually take heavier positions, right? And this particular setup today, this is a normal medium-sized position. But with bull setups, position sizing rules state, and this is how it works. Market just tells me to sit out when I lose my confidence. Every single thing that becomes irrational or problematic, I trade smaller and smaller and smaller on the long setup. This is telling me long setups are prevalent. And so the problematic things that we had happen was that the NASDAQ broke the high probability setup here. So let's take the example that I'm in a normal trade, right? A normal size position, 5 contracts, something like that. When you lose one of your bull confluence indicators, when something happens that shouldn't happen, you actually are now half. So if I'm in a normal position and an S&P or something and the Nasdaq starts breaking a signal, I'll trim half of the position I'm in. You guys saw me trimming. You watched me do it on the stream. Then when we hit here, Nasdaq loses another pivot it shouldn't have held. I mean, it shouldn't have broken. So then now I'm in a small. I'll trim almost all of it. Right? And then S&P itself broke hedge pressure. Now I'm going to say it like this. I have 3 warning signs that are there. Now I need the warning signs to get back out of the way for me to be able to step in small, step in medium, and then step in normal. If we reclaim here, I'm going to get in small there and let it ride. If we get back here, I'm going to get back into my medium, let it ride. So I'm in heavy, smaller, sit out, smaller back in, medium back in to let it ride. If this confirms this and rallies, I will have a $10,000 day today on such a strong bull market. Let me take my 2K loss and not hold a falling knife, but this is how trading works. This is how I do it. I've done this for years, and I win trading competitions with the same strategy. Why not flip short? I'm at the tail end of probably the short trade. Maybe, what, am I going to jump in and get a little bit of this? I don't need to make a little bit of money. I need to preserve my win rate. I only take high probability setups. And even though it's falling, this is a low probability setup. Does that make sense? I don't take low probability setups. I take things that work 90% of the time. If the 10% of the time it crashes out, I'm not blowing up my account. I'm perfectly flat. I made like 15K in the last 3 days, and I'm down like 2,500 today. That's trading, and it's going to keep doing this as time goes by. You take losses, but the best part about why you watch this stream is I lose with grace. I'm not bag holding. I'm not guessing. I've got a method. I'm sitting out where I say to sit out, and this shit is not catching a bid. The S&P has now fallen apart, and that's 4X's now. Resilience is bad. Like, things are just not lining up anymore. And I'm safely on the sidelines, and this can crash today. Sure, I'm not making any money, but this is where you guys have the wrong impression about what trading is. Take it from me. I win global trading competitions. I beat other traders at their game. How? Because I have a strategy on when to sit out. There's nothing better that you will learn than have a strategy and tell you to sit out when you need to. Also, hold on. This looks rather thin. Let me open this box really quick. Maybe this is only half of the panel. It's supposed to be like these things. Hold on. Hold on, you guys. I'll be right back. I'm gonna open this box here. Dude, these things are tough. This box is like glued on here. All right, guys, you're gonna watch me open this thing. I just want to see how order. to take it out of this box. Inside. God, this thing is like cemented on here. Biggest box I've ever seen. Now watch me struggle with this. Pack this in here. That's good. One, two. Oh yeah, that is only 3 in here. That's why. Okay. I was like, this is looking a little thin. There's supposed to be 6. There's only 3. Alright, y'all. Well, I'm an idiot because I didn't go check around the other side of the garage. There's a second, a second box. And I'm like struggling to open this box over here. Ugh. There's a second box. I was like, this looks unusually thin. Oh God. Happy birthday, Matt. Yeah, pretty much. I was like, that looks unusually thin for 6 2-inch thick fiberglass panels. After I struggled to open that box, then I walked outside and just peeked over to the right and there was another box. I'm a fucking idiot. Matt, can trader heavy duty bags move and banana boxes? Throw pots and pans, close books in the bags and drag on the ground. I like that idea. Chances the ES goes all the way to the DD float trade, it's pretty high. But see, the thing is that if you use position management rules, when the market falls apart, has a low probability setup, I just don't take it. So right here, you know, once I'm like, why don't I flip short? Well, you know, I could have gotten some trade on the short. I don't make my living that way. I make my living taking the high probability setups. When they don't work, I sit out. I've got 4 things that tell me to beat in this state. So I have a bigger trade, smaller trade, no trade. Then on the confirmation, if it goes up, which it does 88% a day, or 92% of days will close above the screen line. So why don't I just wait for it to happen and then take it? 90% of days will close above this orange line. So why don't I wait for it to happen and then take it? It's rare for a bull market to lose a bull setup, gain a bull setup, and then lose the bull setup a second time. Usually whatever initial selling is crushed in this market, let it. Once that selling is over, the people that wanted to be bull will likely be back in. But I don't catch the falling knife to bet that the bull market comes back in. I say cautious and bet that the sellers are overwhelming the market today and let it fall. In bear markets, you'll see me short, but in bull markets, you don't see me shorting a lot. All 3 of these things are bullish. It's long only trades. So in the greater market, this is the rule, right? When all 3 of these things are bullish, or even 2 of them, or even 1 of them are bullish, I am bullish. Bull any of the 3. I'm looking for bull setups. If all of them are bearish, I'm bearish. All 3 are down. So today, my choice is bull. My position size was great. As things fell apart, my position size is now here. My rules are preventing me from trading no matter what. If we step back in, so basically I get out of the way, big, medium, small, out, then I get back in, small, medium, normal, and that's how I recover from losses. So if this market goes back to being bullish right here, I'm back to longing small. Here only. Longing medium here only. And imagine what a market like this would do If it rallied, the majority of the time it does. I only take high probability setups, which were here and here. They didn't work the first time, but I'll take them every single time. Trust the process. This could be a mid-market reversal point. Usually is. Okay. Oh. I trade till the end of the session every day. Usually I only trade until about noon on stream. But I'm always watching it. So basically, like today, I'll be waiting and watching for the setups to happen kind of like midday. Yeah. So the best part is I can identify when the market's going down. And from here, just let it. The best thing about like my style of trading is that the market can do this and I'm not blowing up at all. Like I'm going to take a loss. Okay. No big deal. But no blow ups, right? And so that's kind of what your goal is in trading, is to not blow up. Take your lick, walk away. I have my setup. I'm now trading small. And again, I'm not buying this falling knife. I'll buy if we get back to the bull setups. But other than that, just let it fall. And kind of the neat thing is when markets are crashing, take your loss, let it fall. Then, you know, you basically stop the burn. That's it. Well, I try to take... God damn it, Ice Wild, I just fucking explained. Well, I try to take a small long on ES. I love you, bro. I just spent 20 minutes talking about how I'm sitting out. I had the word sit out literally written on the screen. I just went over the class for you guys. My rules have me sitting out, bro. Sitting out. I still don't try to force it. It's too dangerous. We've broken 3 things, so I'm now in the sit-out range. We need to unbreak one of those things. So all other trades on the long side from lower from here are off limits, no matter what. So think of it like this. Think of like a checkerboard. Best way to think about it, right? A checkerboard. You have like your little checker right here. Normal, medium, small, out. And so as you move your checker, then your checker is like right here when you go to push the button. As I go to push the button, it has a number on it. And if the number is out, then it doesn't let me push the button. And right now, this guy has moved from here to here to here. The checker is stuck on the sit out button. So lower from here, I am forbidden from trading until other things unbreak. Every warning sign I take, I undo. My checker moves over here. Right now, the checker is literally sitting here and laughing at me every time I try to push the long button. As a matter of fact, I put a shock collar on my neck right here when I try to push the long button. Bzz, oh, it shocks me. It's like, don't do that. It's too dangerous, right? So this prevents me, and this style of trading prevents me from taking a loss and then over trading and taking more loss and taking more loss and taking more loss. This is fail safe for me. Right? I think the automated levels are coming out this year. What do you mean automated levels? The percentages on the charts. We're working on that. As soon as we do the connection issues, the next thing is that working on. So, as Master Rich has said, you've seen so many melt-ups and meltdowns of various tickers. Better just to sit out and trade when things make sense. Master Rich nailed it. That's exactly what I have to do. So, the checker is sitting on the out. But when we start to reclaim the market that wants to be in... Okay, let me do the lesson one more time. So, greater market is a 4-step process. You wake up every day and you determine this. And like I tell you, this is how I get 80% win rate trading. The goals are to identify your strongest trends and take them, to identify your strongest pivots and take them, and identify when the market has failed those things and adjust your position size based on your risk or your confidence you have. So greater market has 3 things you look at for direction, and then a 4th thing that you look at or how it moves. So the rules are in the greater market, easy as this. Was that DD ratio greater than half? DD ratio. It's greater than half, it's bullish. So we're going to draw an arrow up for bullish. Number 2, is SPY above MHP? Well, yeah, it's 580. SPY on the monthly is way bullish. Okay. So the stocks themselves are bullish. SPY on its own trading is bullish on the monthly scale. Monthly maps, you click this button and this button. The monthly maps are as strong as ever. Hold on, I think I just crashed my rocket scooter platform here. Hold on, I'm out of memory. Let me close this down. My browser just crashed. Get back. Monthly maps are very bullish. The bull side slips down and the bear side slips down like this, it's extremely bullish. As a matter of fact, it's a melt up. So monthly map is also bullish. When only one of those 3 things are bullish, I'm usually bullish as well. When all 3 of these things are bullish, I'm very bullish. As a matter of fact, that was the right choice to make because it's been that way for a while. And, you know, being very bullish is paid off very handsomely this year. As a matter of fact, it's been very much like this whole year. And there's a down day today. Boohoo. Okay. But that happens, right? So the idea is I get on the side of the market that's most probable. As you guys remember from the training, most days go up. So the bull setup is here. And so I'm taking bull trades. The last one is volatility. Just take my word on this. It's VIX futures. Is below triple B, which means non-volatile liquid market, which is great. Markets shouldn't be collapsing. So when they do take notice, it's usually a trend day. So this is the perfect setup for a bull run, right? It shouldn't be volatile. The fact that we're not catching a bid and the market just kind of falling lower slowly, though, is because of the way the VIX is set up here. The market's not just crashing. The market's actually trending lower. Do you guys see how there's no volatility as it's falling? The V's are roughly the same size. It's just literally going down in a straight line. It's not illiquid selling. The market's just becoming overpowered by some consistent selling. That's it. You're not seeing the NASDAQ fall apart as bad as it's just lowering its price. But it's actually really neat. It's like channeling down. And that's what this guy tells you, how it's going to get there. It's just going to slowly shit the bed. And that's awesome, right? So we know that. All right, so this is actually believable. It's not falling on volatility as in lack of a market. It means there are a lot of bulls and a lot of bears, and the bears are winning today. It's falling slowly. So if the bears are winning today, then, you know, I might want to be sitting out as I'm breaking my things. So first and foremost, I start off the day with my understanding of the market. Okay. All the signs were good. S&P was good. NASDAQ was good. Everything was good. Once you start losing high probability setups, anything that's a greater than like 60, 70% setup is a high probability setup. Anytime you get a warning sign over here, any warning signs, you move your checker over from wherever you're confident that the structure is, so we'll call this structure, right? You guys remember 70% of months are green. 3 out of 5 days are green in a bull market. 1 out of 2 days are green in a bear market. It's you kind of want to very rarely be bearish in a market that's bullish. Okay. So I have a little checkerboard here. Normal, medium, small, sit out. My confidence is high, which it was. every time I get a warning sign that things are falling apart that shouldn't have been falling apart, I just make sure I'm trading smaller and smaller and smaller. If I get in on a position, then I'm trimming accordingly. Half of my position, a tenth of my position, like a runner, and then 0. So I got in on the SPY. Nasdaq started falling apart. I trimmed. Nasdaq started falling apart again. I trimmed again. And the checker moves as you lose confidence in the structure. Now the market's trading without structure. It's a little irrational and crazy. Well, my system has me sitting out. Yes, I took a small loss, but you know what? 9 out of 10 days, that trade would have gone up. For every 2,000 I lose, I'll make 20,000. So whatever. Do its thing. Then can you be a catalyst? At this point, it probably could be. Measure it. Oh, you're right. 152.5. You retreat, so it's hard to tell if there's an actual active impact here. It looks like it did retrace, so I wouldn't count it. Actually, hold on. That actually looks like that's correct. Yeah, that is correct. Thank you. There is an IRL here. Let's measure it. And again, news events, right? This happens. And pre-holiday selling, but let me tell you, the market's not bearish. I don't think that way. Okay, so you guys are right. And the distance is 152.5. So literally 208, exactly where the cat active line is. You guys nailed it. Good job. And this so happens, that's exactly where yeah, good call, guys. You guys are so smart. Y'all listen to me. I would consider this a catalyst now. Yeah. So cat active is one of the 2 places I don't trade at all. Also, it obviously lines up with the QQQ MHP. So yeah, that's good. So first and foremost, there's 2 rules that I don't even trade on. Actually 3. Above DD band, I don't trade. Below DD band, strong pivots only. When a cat active, I don't trade. MHP breaks, I don't trade. So we have cat active and MHP break both at the same spot. I don't trade, period. So this is a gamma squeeze to the downside. Let it play out. So as the catalyst becomes inactive and we regain MHP, I'm back to allowing myself to trade small here. Get back in on the confirmed break. Back here, I'm trading back to medium on the confirmed break. That's it. So the idea is that when the market's falling apart, the professional trader is not going to come in and say, let me go ahead and short this, right? It's a bull market that fell apart for a day. One sector is getting crushed. I don't need to chase it. As a matter of fact, just let it fall. I tell myself, I get it for cheaper tomorrow. Right? But if you're trading and trying to pick the direction, you're doing it all wrong. The trick is to know what the stronger side is every day, where your stronger pivots are every day, and then have position sizing rules to go with it. And so as the checker right now, a little checker. Maybe I should create like a checker. A little checkerboard for you guys. My little checker is right here. Stuck on sit out. If we reclaim here, I'll trade. If we reclaim here, I'll add to the position. So I had a big position, medium position, small position. Or sorry, normal. I had medium, small, sit out, small, medium, back in. If we reclaim bull structure, which the market wants to be, I'm back on the bull side. Right now, I'm letting the bears take over and letting them win for the day. Let them have it. I have sustained no loss here. Right here was my point of no return. I closed everything out. I didn't see this green and try to get in, and then this green and try to get in. All the rules are there to sit out. Oh, so Justin, there's a class on Catalyst. It's a whole thing. You guys want me to give you a quickie class on Catalyst? There's 200 people here. Wow, there's 200 people here. I love you guys. Okay, hold on. Y'all want a class on the... You want me to teach you Catalyst real quick? Again, when a Catalyst is active, don't touch the market. Which I guess we need to tell everybody in chat. And you guys make sure you warn your friends. Let me get everybody here. All right. Yeah, let's go for it. Let me log in. It's easier to see in Thinkorswim because we have we don't have tick charts from Executor, but hold on, don't go anywhere. Gotta log in here to my Thinkorswim. Hold on. Pretty cool, fun lesson. Well, no, TradingView has we can have tick charts. We just don't have tick data. We don't buy it. We buy 1 second aggregates. Your data feeds expenses would go way up if we didn't buy it. Yo, what's up, Gil? By the way, if you guys didn't know, you can subscribe to the YouTube channel and get a nice little green icon next to your name, which is kind of neat. All proceeds of that go into the company, you know, building stuff. All right, we're here. Free lesson, ready? Gil and a couple people have found it. You get a golden shovel, the golden dig next to your name. All right. Catalysts. Okay, this is a very important lesson. We don't trade when a cat is active. Okay, I'm gonna delete all of this, right? I'm gonna remove this from the screen. All right. Couple rules. This is it. This is a rocket scooter imminent technique. Now imagine you had one of these back here as well. Delete all that, delete all that, delete all this. Okay. Imagine that just right here, I've determined that the market has fallen apart. Right? We broke MHP, and let's use some traditional technical analysis. Look, guys, there's a trend line here. And, well, it should have held the trend line, and now it's fallen apart. But MHP was right there, and we know that things are pretty bad. Even, you know, screw technical analysis that could indicate I should be buying there. We use hedge pressure. And down here, the market has fallen apart. This could do something like this today, and I'm safely out of the way. How am I safe out of the way? To get in cheaper tomorrow? Well, let's talk about Catalyst. It's a pretty cool... Go away. It's a pretty cool thing that you can do and learn. I'll teach you how to identify it. You get a tick chart. 233 is pretty normal. It doesn't matter which one. Just something that lets you identify it. And I'm going to tell you right now, the S&P doesn't have one. I can see it. But NASDAQ likely does. And I'm going to tell you what to look for. Right out the door, NASDAQ kind of like, you know, shit the bed on its own thing. And actually, let me see where we're bouncing right there. Well, that's an old impact that's dead. Okay, hold on. Okay. So what you're looking for, and this is a technique that we invented related to the risk interval, which you guys have taken classes on. What you're looking for, and I want you to get a Fibonacci retracement tool, okay? And I want you, before you start vomiting in your mouth, because we're not using it as a fib tool, I want you to go here and delete all of these useless nonsense guru numbers that people have trained you to think mean something in the market. Fibonacci's are completely useless. Do not use them. They're absolutely cringeworthy dumb. But what you're going to do is take this useless tool that the gurus of the 80s taught you to use and turn it into a useful tool. We're going to take the Fibonacci tool and turn it into a ruler. That's it. So go through here and uncheck all of these numbers, all these magic number boxes supposedly have meaning, because they don't, and just leave 0, 1/2, and 1 on there. You're going to convert this useless tool into something really nice. It is a ruler with a midpoint. That's it. It's a distance with the middle marked. Simple as that. You're going to take this thing and do something useful with it. So it's like, you know, a ruler with just a middle line's all you care about. And you're going to go to a tick chart. And you're going to find where the market has like a straight run. And this one's easy to find on an event. Usually news or market open or some high volume event that pushes the market down. You go to a tick chart, which is a time independent chart. And what you're going to do is mark that first big red candle at the start with that ruler. And you're going to drag this thing all the way down to the lows. And you're going to look for something that looks like this with your eyes. On a tick chart, you're going to look for places where the market is V'ing, like so. There's a V. There's a V. There's a V. And you're going to look for where your biggest V is on that first run. Example, it's here. We all agree, yes, in chat? This is like the biggest V. This one got bigger. This one got bigger. This one's the biggest. This one's the smallest. You're looking for where volatility expands. Yeah, and fun fact is, as Trade Screwed said, is like 50 is not even a fib number, right? It's so funny, yeah. The market, as you learn from here, the market does not move in patterns, and I love that you guys are on the same page as us. This technical analysis was like, before TikTok was a thing, in the 1970s and 80s, failed hedge fund managers would write books on technical analysis. They all have a new computational method. Well, my Bollinger Bands are better than your RSI. Oh yeah, well my Elliott Waves are better than your Bollinger Bands. And they're all a bunch of junk. These idiots would have fucking had TikTok accounts in the 80s if it was around, selling you $59.99 courses, but they sold you $59.99 books. And people bought it up and still use this crap, even though the failure rate of traders is like 98%. That's why it's garbage. Okay, so you're looking for the biggest V, and there's a reason for that, is because V's have to do with the volatility. You're looking for when the volatility expands the most rapid and then contracts. You're looking for the maximum volatility, the biggest V, which means the least amount of liquidity. And as soon as that volatility expands and contracts on a tick chart, you call us a head and shoulders, I'm booting you from the stream. This is a volatility exhaustion point where liquidity was found. When the V's tighten up, buyers were found. So you're looking for the stretch at which the market makers take the most amount on the other side of the position. Remember, high volatility means less liquidity, which means as markets are falling, there's fewer buyers. There's fewer buyers, the market makers were the buyer. So you're looking for where they took their biggest position, which is right here on the other side of the market. As everybody's selling to them, they've bought the most right here. So we're looking for the biggest V. So let's go ahead and here and mark this up. These are pretty solid. And this one's probably the biggest, and this is where it tightens up again. We got here, and here, and then here, and then here. Usually that last gulp of a market maker is seen as volume on a tick chart. Check. There it is. Number two is you can go to the time chart, like a 1 minute or something, and let Thinkorswim finish dancing. And you will see that right here at the bottom of here, there's also a volume spike, okay? So that's where the bid was found. That's when there were buyers that were actually found. You're looking for where the dealers took their largest gulp of position to find the imbalance. They're long while the market's falling. Okay, so let's just mark that area right here. I sort of call it head and shoulders. You're out. You're done. You're going to drag this line all the way to the bottom. At the top, this is called an anchor point. Watch this. Something magical happens here. You start where the move starts, and you're looking for it to move and volatility expand and contract without retracing half the distance. This useful X Fibonacci ruler, it converted from Fibonaccianity into ruler, the religion of ruler. It's a convert. Now this tool is useful again. All right, here. So in the middle, we call this an impact red line because what this is this is the balance point of the market makers who were long right here. Sellers created the move. Oops. Dang it. Sellers created the move. Sellers were here. And the sellers they found the buyers here. Buyers are found. Because VIX spiked and came down. Let's go confirm that really quick. In the first move. Well, anyways. And weird that there actually is not a lot of volatility. So we didn't get much of a move in the VIX, to be honest. So the first move, right about 839, yeah, there really wasn't much. The volatility didn't even really register. Normally, you will see 789. You will see the volatility pop and then immediately drop when those buyers are found. Now, there wasn't much movement involved in VIX today, which is interesting, which means the market isn't illiquid. It just got overwhelmed from selling. But normally, you'd want to see the volatility spike and drop. Today wasn't that evident, but that's okay. Forget about that for now. The technique is still here. You measure the halfway distance between here and the buyers are found. What you do is you click that, you hit space bar. If you didn't know this in Thinkorswim, you're welcome. It took me 10 years to learn this trick. That duplicates your drawing and creates a second one. You guys are in the right-click duplicate drawing category. Just click and hit space bar. The hotkey was there. Should have known this my entire life. Now what you're going to do is completely drag this lower as the market trades lower and lower and lower. Follow the blue line with your eyes. Anytime price returns to the blue line, well, it's red now, then that is a high volume pivot. We haven't retraced to either one of them. We call these impact red lines, and we call these run linked red lines. So what happens is that in these two different things, they're illiquidity pivots. The market makers have balance points here and here. Guaranteed, when you touch this and touch this, you will see ridiculous volume. Ridiculous. There's a liquidity points or illiquidity points that can be tested for liquidity. So the interesting part about this is that you've identified a couple of pieces, all right? And I'm going to go ahead and mark them on the chart. And an anchor point, which is here. An anchor point is basically where you start your calculation, where the market starts its little thing. I'm going to write the word anchor point here so you can see it. And again, when you get good at this technique only takes you like 1 minute to do. And you mark it up. And this is useful because this pivot is going to stay here forever until it's touched once. Both of these pivots. And then what you do is you're going to go to Rocket Scooter. And this is the magic part. We're talking about ES. We're going to go down to ES in the risk interval table. Go here. NQ. We're going to see a number called 152.5. This is a very important number. This is related to the margin requirement and the risk. The expected range of a really solid move on the market when structure is broken. So 152. We'll just arbitrarily do that. And we'll do this 2,800. What I'm doing is I'm making a box of linked 152.5. So you can see that risk interval in all of its glory right here. And you're going to measure from exactly that anchor point this distance here as the market is falling apart. And you're going to draw a line right there, and you're going to call it the catalyst is active line. And I like to make these like big, like green usually, something really big and really fat so that I know. And any time that you drop below this line, something very interesting happens. This has to do with the future's ability to hold structure while it tracks the index. If the futures have moved and created a move beyond the catalyst, there are some certainties that will happen, and I will show you what they are. So let's go ahead and mark right here on the chart, cat active. And the rule is when this happens, when you create an impact line here that doesn't retrace, and then you fall that distance or further, you automatically sit out and you do not trade anything down here. And I'm going to tell you a couple things that are very important that are going to happen. Number one, your VVIX will go through the roof or start to get increased really rapidly. What is the VVIX? It's the volatility of the VIX itself. Your VVIX will start to trade up. And as you see, your VVIX is trading up. Over time, your VVIX is typically relatively low in bull markets, and then it goes up in really strong bear markets. But your VVIX is going to start trending up, which means volatility can exponentially get bigger. So right about that point in time, about 9:22 in the morning, the VVIX starts to take some path up. Now, again, there's not a lot of volatility today, but usually the VVIX will start moving really higher under most circumstances. But there is very surprisingly a lot of liquidity today for this kind of a move. But number two is your VIX will also move up, possibly exponentially. And again, it's moving up, but only slowly. Since that moment in time, since 9:22 in the morning, which is here. And the VIX is still trying to move higher. Now, again, the magnitude is really small, but most days when catalysts are active, it can be drastic. The VIX can start moving very rapidly. Because the VIX can move very rapidly relative, what you're going to see is that your stable Vs that you see how these are all stable, relatively the same. The Vs get exponentially bigger. Look how big that gets on the tick chart. The break point here is that the market no longer falls gently, it falls crazily. And because this exact point, that distance we give you, tells you that, oh no, it gets crazy. You can actually predict this, right? It's a bit subjective. Not really, but slightly subjective. You're looking for a time-independent chart, which is just showing that selling has overwhelmed the buying without the buyers able to catch a bid. If market makers are raising price, they're looking for sellers. Lowering price, they're looking for buyers. And so if you come to the middle, the sellers and buyers are in equilibrium. What you're looking for is a straight run move on a tick chart. Not time, but just straight up orders that have not found the middle of the distance of the bid and the ask, right? So slightly subjective on getting just this point right, but many times it's quite obvious it's the start of a straight run. You see all these red candles right there. It's not really, there's not that open interpretation on this one. It's typically triggered by an event or news or market open or something with high volume, right? So isolating that anchor point is just it. And most of the time you're going to get it right, despite there being a little bit of subjectivity. Like here, do you guys all see this? How the market's kind of just like stable. Then all of a sudden the V's get ridiculously big and small and big and small and big. So far, so good. Yes, chat, you guys see it? Can you see how it kind of changes the dynamic of how the market moves? This tells you how the market moves. Do we all see it before we move on? When a catalyst is active, it's dangerous. We automatically sit out, and these are the reasons why. Do you guys see it? Is there still a delay on the YouTube? Hello? Maybe there's still a delay. Chat. Loud and clear? Oh, the delay is still on. Hold on. All right, cool. All right. So because the drawdown can get majorly crazy, the symmetry of how the volatility moves on the tick chart is kind of broken. Look. This looks relatively stable, right? And down here, it's huge, small, medium, small, medium. This side has a V here. You see how the market just seems to kind of like being like all over the place rather than... Okay, cool. So because there's some asymmetry here and basically volatility is starting to take over, outside of a catalyst, number one reason is that your drawdown can get exponentially bigger even when you're right on the trade. Make it easier for yourself. Case in point number two, at exactly, I haven't even looked at it, but exactly that catalyst line, you will have a high volume pivot every single time. When you magically fall one risk interval distance that you get from the Rocket Seeder platform, this is an exploit of the CME margining technique called span. we exploit pivot points from this. 152 is the catalyst line for NASDAQ. 40 is for S&P, and those numbers will change when the margin requirements change. When you get exactly here, you will start to see volume spike asymmetrically all below this. Normally, you expect high volume pivots to happen at your high volume nodes. But anywhere below here, what you will see is while you had a... Look. At exactly this moment in time here, do you see how there's just random volume spikes everywhere? Look at this. All over the place. You don't normally see that. You've now identified margin calls with this technique. Normally, a trading day, you know, it comes down like this. You'll have high volume at like hedge pressure and high volume at bull zone. And then it kind of does this, and the end of the day it does that. But when a catalyst is active, you're going to see like this, like asymmetric volume spikes all over the place when a cat is active. It's guaranteed this will never not work. People are getting margin calls right here. Oh, shit, you can't even see it. Hold up. Okay, y'all are, the border's killing it. Get here. Let me do this all over again. You will never... You don't want to trade when people are getting margin calls or getting squeezed. This is a margin call risk number. The CME group sets this. And again, below the cat active line, which is here, the moment it touches, which starts off right here, you will start to see asymmetric volume spikes all over the place. Up, down, up, down, up, down, up. Do y'all see it? And they're usually accompanied by ridiculously big fucking candles. And you can predict it by never trading more than this catalyst. We teach you this technique in our classes. Does everyone see the weird volume spikes here that you can't explain? Giant red candles that just fall very quickly and then trace back up. Then fall really quickly and trace back up. This is what a catalyst does. The market falls and it bumps other people and it bumps other people. And stops are triggering stops. And you can identify that started exactly here. In case you weren't paying attention, we don't trade when this is active. Because there is no way to gauge. This is all random. This margin call, could you have predicted that? No. How about this one? No. How about this one? Or stops triggering stops. The market is illiquid and crazy here. So you now have a lot of asymmetry in the market. Typically, you're not going to have this. A typical volume profile for the, volume for the day is a little more stable. Now, again, let me show you like another day where the volume wasn't crazy, like today. This day. No catalyst, no event. It kind of does what do you expect it to do. The volume is really high, and then it, it trades lower and lower and lower. And then it's going like this and then closes. You have high volume pivot here, I guess. But you're not seeing like random volume spikes that are higher midday than the average volume that much. It's kind of following a path, right? So the cool thing about this is that when the market falls too far too quick, I don't know if we triggered one here, but you see how kind of like out of the blue, you start getting some like asymmetric. There might have had one here, but that's normally not what you want to see. And most days aren't going to have that. Most bullish days are going to be nice and clean and easy. You're not going to get a bunch of weird asymmetric. Like here's a good symmetric, right? Kind of follows that same pattern. You're not getting big volume spikes relative to the open. When a catalyst is active, you will. You're going to see it all over the place. The volume is looking different. This doesn't look like a beautiful J shape like it normally is. There's no J here. This thing looks like this. You have higher volume an hour in than you did here. Volume is going up and it's weird and sporadic, right? So you can predict that the volume's going to be weird and sporadic and the market's just going to have insanely large V's relative to here. Small V, small V, small V, and all of a sudden, big V, small V, big V. I mean, this is just crazy trading, right? This one fell on high volume. This one fell on low volume. What the hell, right? It doesn't make any sense, but that's the whole point. Down here, the market's not going to make sense. People are in like the margin call state. People are in the I'm getting squeezed state. The very strong bull structure market we taught you guys about has been broken. Everyone was caught off guard today. And so a lot of people are getting squeezed and whatever. And guess what? We are on the sidelines. Aren't we on the sidelines, you guys? I don't know if you are, but I am. Because it's unpredictable. This is choppy, and the Nasdaq is bouncing up and down 100 points. And this is a mild catalyst, by the way. In events like this, you can see hundreds. In COVID, you can see 1,000-point moves in the Nasdaq. It's crazy. So when CAD is active, we don't trade. The VVIX goes up, which means the VIX can go up exponentially, which means your Vs can get out of control. Imagine how clean that looked, and all of a sudden, it came right back down. There's no structure anymore. Right? So the catalyst in the Nasdaq was so powerful that it started yanking the Nasdaq down. The S&P down. Even the S&P had really strong structure too. The S&P is probably going ape shit too because Nasdaq has gone ape shit. And you can see the S&P was relatively stable. Look at those V's, nice and stable. And all of a sudden, at the same time, the Nasdaq, look at the S&P is getting squeezed, crazy. At exactly this point in time, you can see how the market structure just falls apart. That number is meticulously calculated by the CME group themselves for futures. The risk interval we extract from their information that they publish to create a single node that tells you when the market falls apart, when structure falls apart. I am never bag holding in a crash day when the market falls apart. As a matter of fact, I don't want to trade. Well, right now on Wall Street, everyone's going crazy. Oh, margin call, up, down, all the phones are ringing like in the 80s. Everyone's like, no, buy, sell, no, buy, sell. And like, I'm over here listening to music and I'm on the sidelines, right? There is no structure. If you make any money here, it's random noise at this point. The nice, gentle selling falls apart at exactly that moment in time. So today, we can tell a story, right? Today, NASDAQ stocks, primarily tech, fell so hard that while the S&P was bullish and all the other sectors were green, it started triggering selling elsewhere as people are experiencing probably margin calls here. And maybe firms are like selling other things to be able to hold on to their tech or whatever. Now it's yanking discretionary down, industrials down, materials down, and these were all highly strong for the day. So today, all the news piled up on Wednesday as well, as the stock market is going to be closed tomorrow and Friday. Futures market's open tomorrow and Friday morning. The stock market's closed. And so all of the news piled up today. We had PMI, we had oil reports, we had existing home sales, we had, God, like all this news came in. Oh, shit. Ants took over my eggs again. Babe, ants ate my eggs. No. I love Texas, baby. Yeah, like half of them. Y'all gotta love Texas, dude. There is like an ant. The ants have infiltrated our house since Halloween, so. Dude, they sneak in everywhere, and anything on the floor they're getting into now. Ants are a thing in Texas. They get all over the place. But we're moving, so I'd go spray and care, but we're moving, so I don't really care that much. And I was still going to eat my eggs, but there were too many ants in there. I tried to shoo them away. Okay, so the catalyst today was that the Nasdaq was just selling so hard, it broke all the structure in the S&P. And so right about here, these are the ones, these aren't the fire ants. These are like the regular ones that don't bite hard. Well, they don't bite that hard. So yeah, so one day, basically after Halloween, IDOC put the pumpkin outside in a trash bag that leaked, and the ants just figure out that our house has food. Ever since then, they've been getting into everything. The rotting pumpkin. But they're not going to follow me across town. All right, so just to finish up the lesson here. Right about that moment in time is when that catalyst basically is active. And so at exactly like 9:14 in the morning, everything just kind of fell apart. Dude, they're like crawling all over me today. Now they're mad because I took their food away. And so what you'll see is that the Nasdaq just fell too hard and broke structure. And because of that, everything else that we have has a higher probability of breaking. And I wasn't even paying attention to that. So you guys brought it up. But right here is when that catalyst was active in Nasdaq. And the S&P is, look, it's failing our strong pivots that we would normally take anyways. And normally I would trade this every single time, but we don't trade when a cat is active, right? So right here, these high probability pivots, you had 80% here, 90% here. As hedge pressure is broken, that becomes 70%. Now you guys are laughing me, slapping ants on my arm every minute. 70% of days under most conditions. And then under catalyst active, we don't have a stat for that. We just kind of sit out. So the probabilities deteriorate on our setups when the catalyst is active as well. So because Nasdaq is in a catalyst state, I'm not taking the trade I normally take there, the trade I normally take there. I'm just going to let it fall. No, I'm not blaming it on IDOC. She blamed herself. It's really sweet that she took the pumpkins out. But the bag must have snagged something, had a little hole in it. Dude, and like underneath the mat, like underneath our doormat inside the house, there was just pumpkin juice everywhere. And I lifted it up and there was like thousands of ants just scurrying everywhere. So you can't leave anything out. They're like on the prowl looking for food everywhere you can go. They're all over my mouse pad right now. Get out of here. You will be dining with Odin in Valhalla tonight, ants. Welcome to Oblivion. Yeah, there's like 100 of them. Enjoy the darkness. Oh, I feel so bad. I hate killing things, by the way. Even bugs, I take them outside usually, but... God, they're everywhere. Go. Wait, because I forgot to take the trash out? That's my fault. Okay, so ideally, guys, you can see that when a catalyst is active, our high probability pivots also fall apart. We don't take them. Don't take them. Don't take them. No trade, no trade, no trade. It's basically to prevent yourself from blowing up, right? They're like, wait, the trail. I'm following the trail where my friends told me there's food. But now all I see is a bunch of my dead comrades. What's going on? The ants are scurrying right now. You know what's kind of crazy? Is that one day I smashed a bunch of ants. And then the next day, ants were hauling the other ants off. Like an ant funeral, or maybe they were taking them back to eat them. I don't even know. But I was like, what are the ants getting into now? I'm like, oh, they're taking away this other pile of dead ants that I squashed. So what's up? Have I ever? This is at like 30 minutes, Gabriel. Oh, okay, yeah. So right at 30 minutes, which should be about. Okay, so basically right here. Thank you. So right here is when that catalyst took off, and you can see even SPY felt it, right? And so our normal high probability setups that we do take, which are like here and here and here, and I trade them every single time. When a catalyst is active, I don't really take them. You see how there's no power anymore? It's kind of random and all over the place at this point. So that's it. No ant left behind. Maybe the ants are just like vicious, savage cannibals that are just like, fuck it, it's food. Hey, Bob, what's up? Sorry, man. I got a family to feed, you know? Hey, honey, look, it's the Joneses. Oh, bring him back. We'll eat them tonight. God, dude, they're everywhere. There was like 100 ants in that bowl, and now they're scurrying all over my desk. Kind of cute. They're like these little black ones. I'm usually at one with nature, but you steal my eggies, it means war. What I'm asking is every time your setups fail, also happen. Well, when catalysts are active, the probability of everything goes down. So like today, yeah, the setups are failing. So like why, like essentially, that's why we throw everything out. So all the stuff that we do is conditional based on a couple of rules, right? Checkerboard is here. And so when you lose some of your things, you move from in, M, small, out. There's a couple of things that take you straight to out every time, no matter where you are. Number one is when VIX is moved past risk interval. We teach this in a class. That's an automatic sit out. Number two, cat active in any index product, S&P or NASDAQ. It's an automatic sit out. They're not biting me, they're just tickling me. I haven't gotten bitten yet. These are the cute little black ones that very rarely will bite you. Just annoying. Number three is MHP break on that particular index. These three things automatically go to out, no matter what. And number four, it's not a market crashing condition, but greater than DD bands. Above DD bands, I don't trade either. Automatic sit out. So this is like the market's too bullish. It's just kind of sit out of the way of this one. Because typically markets that move that far that fast, a lot of times can sell off midday. So stay away from that one too. So these are automatic sit outs, which means that I don't take the trade because statistically the probabilities that the 90% has deteriorated to practically nothing, right? Every single time trade deteriorated. So when catalyst is active, I don't take my every single day trades, which every single day I would be long from here to here. But as right now, I'm automatic sit out. Pretty cool, right? So like we basically have rules that allow me, and look, the setup is failing. That's how good our stuff is. There's such a regimented process on when to apply my strategy. I love teaching this class because some people were asking me, but aren't you going to long here? The answer is no. My checker is stuck right here in the sit out. So it may not look sexy strategically sit out, but I'm going to tell you, this is how I pay my bills in life. By not trying to be a hero in here and just accepting I took my loss. I'm not revenge trading. You guys ever wanted a system or a strategy to not revenge trade or not overtrade? That's exactly why I designed what I did. Like I said, y'all see me working my way to the top 5 on the Robinson leaderboard. You just see me work my way to winning ETFs trading contest last month. Y'all already told me to get on the top step leaderboard. All right, let me go get on the top step leaderboard. Whatever. The way that you get on leaderboards and make money trading and win trades is to know when not to trade. The actual secret to trading is to have a system on when to not trade. This is the secret to making money. This is it. Risk is too crazy. Well, everybody in Wall Street is like, buy, sell, I don't know. Hold on. You got phones on his arms. I know they don't do phones anymore. Remember the 80s when everybody's phones on their arms talking to all their brokers and everybody's buy, sell, buy, get them and sell it. And I'm just like, boy, it seems so peaceful over here. That's really the trick. When not to trade. When to sit out. To know that the market has lost all structure, all high probability things are gone. When to sit out. And so what's neat about this is that I'm going to do the thing I always do in the situation. I was reading the other day that Top Step created a sit out button. I don't know, timeout button. They were like, look, guys, we invented a timeout button. And I thought, oh, that's cute. You can click it and pre-program it to time yourself out for 30 minutes. And once you click that button, you have the discipline to click it. It won't let you trade in their platform for 30 minutes. How neat is that? Blue Horseshoe loves Anacott Steel. I should watch that today just to kind of like have fun on our day off. So yeah, Top Step made a cute little timeout button. And I'm like, yeah, prevent yourself from trading. Now, again, if you have the discipline to not trade, you don't need that. It's the same discipline you need to click the same button. So it's just a visual thing. It's slightly better, but again, you need discipline to force yourself to click that button too. But you also, with Rock Scooter, guys, listen, I love Top Step, but I kind of thought about the idea they had before they had, because I also have a timeout button. I invented it years before they did. As a matter of fact, Microsoft and Apple, they invented it years before even I did. Here's a timeout button. You see this X right here? Does everybody see this X at the top right of your browser? Okay. Y'all see it, right? Watch. There's my timeout button. All right. Every trading platform has one. Don't give credit to Top Step. Click the X. Don't be an idiot. Time yourself out. I can't touch anything. I close it down. You already got one. You open TradingView, close it down. Thinkorswim, close it down. Hold on, wait. You guys ready to watch it? Trade debate. Close it down. There you go. I timed myself out. I can't touch anything now. You have one. You all have one. I've timed myself out permanently. I got to through all these steps to log back in, sign back in. Look, I'm not even going to look at it. I'm done. Right? So the idea is that the discipline is there, folks. You just got to click it yourself. Knowing the market took a hit. I took a hit today. That's okay. But I don't trade outside of here because the volatility gets kind of crazy and mad. Don't try to be a hero today. I'm just going to let it fall. If you close the browser, you find yourself opening the mobile version. All right, somebody go to Kumo's house and take his phone from him. You're banned. Taking your phone from you. You identify market caps without a time-independent time frame. You can, Gabriel. So the reason I use Thinkorswim for charting for the most part, you guys, is because it has tick charts and we don't buy tick data at Rocket Scooter. So Thinkorswim is where I always had it. You can on a time chart. Sometimes it's just harder to see. I'll show you the difference. Like in NASDAQ, you can't see the little bit of volatility here. You can estimate it, but it's really good to just have like a really, really tight tick chart. Like a 25 is really good, or a 233 if you want to zoom out a bit more, but you can see it. And what you're looking for is just like waves like this, where the market just, let me zoom in. You're looking for a red candle, red candle, red candle with no retracement like this, and then it starts to retrace. These are time independent charts that just show pure orders. The market got bombarded with selling right here. So tick charts are the easiest way to identify that one directional selling pressure. Typically, all selling falls and retraces on a tick chart. Falls and retraces. Falls and retraces. You're not seeing it here. When you look at this, it's like this is not necessarily an event because there's just buying and selling as it's trading lower. What you're trying to look for, and again, it's slightly subjective, but you can usually time it with news or with events, you know? Like, so here, it's pretty easy to see, right? It's just kind of falling in one direction, falling and falling and falling. There's no real liquidity here. You're not seeing that bounce up, right? When you open a brokerage account in the US, if you're not a US citizen, yes, maybe? I'm not sure. I don't know. I don't know the rules of that. I don't know. Maybe not. You need a social security number, I think, in the US accounts. Machine says iPhones have settings to lock apps now, so you won't be able to use mobile version either. Yeah. I don't peg your phone at Top Step. I actually think it's a really cool idea. I was just memeing them to have fun. It's a great idea, actually. It's a really good idea to have things for you to apply discipline to your own trading. The joke I say is, well, you need discipline to also click that button. So, but it is a one-click close everything down for a certain amount of time. You can still watch it, but I tell people just close it down in general because watching it's also dangerous. Watching it's also very dangerous. Oh, look, it's rallying. Let me get back in because I'm going to miss out. Like, the market's going to show you things that entice you to get back in when you shouldn't. So had I seen all these green candles, oh, this is probably the bottom. Oh, wait, I'm dying again. Right? And again, we hit lower lows. Let's drag this to lower lows right here. These red lines will stay here forever until they're touched. And anytime you touch them, it is a guaranteed massive volume spike. Come back tomorrow. I'll show you this. If we hit 902 and 813, you will see volume spike like you've never seen. It's crazy. It's going to be huge. Damn, Jace, I don't know the answer to that. Yeah, just smacked ESDD band, but am I going to take the long there? No. Do I care? No. All right, I'm going to find out where the ants are coming from and spray. But yeah, so you guys, this is a good lesson, basically. You see the light on in here. I'll never see the light on. No, we just sit out on this one. Can we go long after 1 p.m.? So I don't care what you guys do, but I don't. In this particular rule, we've predicted that the market's stability is falling apart. The only time I will trade anymore is if we're above here. We need to reclaim or else I'm not doing anything. If not, I just sit out. So I avoid like market crashes. You will never see me blow up my account. Here. I avoid market crashes every single day. Every single time they happen, I've got a great warning sign. I will never blow up an account live on stream. You'll never see it because I sit out when the catalysts are active. Sam J, thanks, man. I love you too, man. Did you find it, babe? Thank you. Hey. We need to order more. Ants hate soap, water, and spray cleaner. So I'll be back. So one of the tricks that I found over the years is you box them off. Basically, you take some organic cleaner or you get some soap water and you just spray like a ring around where they are. and they don't cross that barrier. It's like salt with a slug. Hold on. That's my IG. Oh yeah, follow me on IG, guys. Hold on. Hold on. All right, love you guys. Thanks for tuning in. We're going to call it a day. Hey, I want to give you guys a video so you guys can watch what Rocket Scooter stuff is all about. Check this out. This is a video I want you all to watch. This is the free session we did, training session. Kind of detail what our system is all about and our style is. We do positional risk management or positional risk analysis here. I can locate where high volume pivots are. I can determine when the market structure's falling apart and sit out when I need to. We teach all of this. You have access to our platform. We have this really cool Black Friday thing going on. Gabriel, the answer is you could do the same thing, but it's harder to see those V's because on a time candle, that volatility that you're looking for is going to be like inside of a candle. So like example, this little red candle here, right? You can see that it looks like this. I'm going to color it in so you know that it's red. The market, what this really looks like on a tick chart is the market opens here, closes, high and low, right? So in reality, the tick chart is going to open, low, high, close over the course of that 1 minute. So you are looking for this V, right, to mark, but you're not going to easily see it. So what you're kind of looking for on a time chart is the biggest single, like go to the smallest time frame you can, 1 minute, and you're looking for the biggest candle by size with wicks on both sides to show that V. So it's a little harder to see, but your brain should go, wait, where's the biggest V candle on here? The one that's the biggest. Maybe this one, maybe this one. You're looking for one that basically has a big wick on either side to show that V like that. Does that make sense, Gabriel? It's harder on a time chart. It's not impossible. You're looking for the biggest stretch in a single minute, right? And so this is the open, high, low, close, right? And you can get close, yeah. So basically you're trying to find like what's the biggest high to low distance. So you're to come in here and you were like, to measure like which one's the highest. Let me draw a box. Okay, that looks like that's the biggest one. Take this and let's move it. Yep, that one's smaller, that one's smaller, that one's smaller. Oh, that one's bigger. Okay, that's the one. So what's the biggest 1 minute candle? Again, it's subjective, but this also is helpful. There's the one with wicks on both sides. You see that? So on a time chart, the biggest 1 minute candle with wicks. That app is free to get, an independent chart. This is Thinkorswim. This is free. But the thing is that the number that tells you when the catalyst is active is only available through our... We do that calculation. You can see that our calculation is an exploit of the CME group who sets margin requirements for these things. Our platform. And our platform has a Black Friday thing going on. We have a 50% off first month. Check it out. All of our courses included. We do Zoom calls twice a day. Live trading. You can watch it in live. No delay like on YouTube. And like I said, we've got 6,000 members and growing. Target. This is this here. I just put the link there. We'll be doing a giveaway on Friday, so you guys come back. Here in Denmark, what's up? Use copper tape and snails and other insects won't cross. Oh, really? Interesting. Yeah, Texas is really, really bad for its ant problem. They usually come in the house when it's hot. They will find a way into your house no matter what you do. You can spray around the outside with chemicals, but I don't like to spray with chemicals because I'm a chemical engineer by design, by degree, and I'll tell you guys something. Anything that's designed to kill bugs is not necessarily healthy for you. So I don't usually spray chemicals to kill bugs unless I absolutely have to. I'll use as much organic treatment as I can. If you do have to spray outside is better. Don't ever spray chemicals in your house where you breathe, eat, sleep, things like that. You never know the long-term effects of these toxic things. So like Miss Myers is like organic soap. It's soap water that we make in there. And so soap is good. Soap kills bugs, usually enough. But is live stream on Friday? Yeah, we'll be here Friday. So everybody come here. Go to our Discord. Hold on. Here. So I'll make a little note here. Structure, market falls apart. I automatically sit out every time. Bull market loses structure. Just let it have its day. Like that's the whole point. And as a trader, identifying that and not trying to say, okay, well, where am I going to trade right now? There's an appropriate strategy that just has a strategy to actually sit out. And that's kind of how I got to be like more solid in my trading as I've ever been, is having structure to sit out. Okay. All right, let me make a little tweet here. All right, we'll see you guys. Head over to the Discord. We'll be doing a Zoom call later today. Even alone like that. All the day. Come in there and treat the rooms. Yeah, apartments will force you to do it. Usually don't get a chance of that. I try my hardest not to spray chemicals in my house. I'll spray it outside the house. But bugs hate soap water if you want a trick. Little soap, little water. We'll be doing giveaways on Friday for 3 ETF accounts. Don't forget, if you use Elite Trader Funding, use our code with them. Every $250 you spend with those guys will enter into a giveaway. Wipe your desk with vinegar and ants will run away. Oh, yeah. Vinegar is good. Can't win them all. We've had some big up weeks, big up days. Losing day today, but hey, losing with stride, not blowing up, and that's what it's what you aim to be as a trader. No one to sit out and walk away. Let Wall Street be the ones that are fighting over this and trying to figure out what's going on. And you go have fun. It's the day before Thanksgiving. Enjoy time with the family. I'm throwing a huge party and having a huge cookout. Follow me on Instagram. You can follow the pictures. I make the world's best turkey, and if you guys are lucky, I might even show you my recipe. I love y'all. We'll see y'all later. Come back at 3 o'clock or 3:30 for the Zoom call. We'll see y'all later. Thanks for tuning in. Don't forget to sub to the stream. And watch that video I just posted. It'll give you a little bit more insight about what it is we teach and how we exploit a lot of processes in the market to discover and extract volume pivots. It's probably unlike anything you've seen before, and we appreciate you guys give it a shot. Free video.